about what were the levers for growth. Let's get on board Hemant Kabra, who's a Joint Managing Director, Ratna Wires, who's now joining us. Mr. Kabra, thank you so much for joining us. Very strong set coming in from Ratna Wires, and in fact, the stock is reacting with an uptick of almost 10%. Your net profit is up 73% on a year-on-year basis. Even for that matter, it has recorded your quarterly performance is at an all-time high revenue and EBITDA and on PAT as well. Firstly, do you see this kind of growth to sustain? And also, what have been the levers for growth in this quarter?
Thank you, Ankita, and for this call. And yes, the growth has been fantastic. It is mainly because of our new plant at Bhiwadi for the copper tube, which has been set up, where we have started production in that setup in the month of June, which you are seeing the result of volume addition in the Q3 quarter. And this is now consistently, we can see a good volume uptake coming in. So this profit is a combination of a good volume uptake from the new plant of Bhiwadi for the copper tube business, as well as there is some increase because of the copper price, which has gone up drastically. There is some accounting working on that, but it's majorly coming out of the volume growth, which is coming out of the new plant of Bhiwadi.
Right. So you're talking about the volume growth coming in from Bhiwadi. Do you see that to sustain? And also going ahead, do you see an expansion in the volumes?
Yes, that is sustainable volume growth, and you will see a further volume growth coming in next financial year for the copper tube business. And yes, and also this margins, if you see over the period of time, we have increased our margin in terms of overall portfolio by almost 10% into the margin portfolio.
Yes, in fact, that was my next question, Hemant. As far as the margins are concerned, we have seen a consistent rise in your margins also. Is that also sustainable going ahead? And what is the margin that you would be guiding for?
Usually, we say that our margins for last year were close to between, say, 32,000 to 36,000 EBITDA per ton. But now we can say that we have moved the upper ladder between 38,000 to 44,000 rupees per EBITDA per metric ton should be the margins, which is a good sign in terms of efficiency, the volume growth, the overall expenses has been very, very caterly operationally channelized, which helps us to expand this margin also a little bit.
Right. Also, if I see your revenue mix from exports sits at 8%. So there is an uptick on a year-on-year basis from an early 7%, but the domestic revenue mix has gone down a bit. Why is that?
No, revenue mix in terms of export will be more or less like that. It's hardly any difference. It will be our export will be always between 8 to 10%, and the domestic will be rest 90 to 92%.
And also, as far as your segments are concerned, whether it is, enameled wires and strips, whether it's copper tubes and pipes, that between that, is that revenue mix also likely to change? Because your enameled wires and strips contributes 71%, and your copper tubes and pipes are contributing approximately 27% to your revenue, right?
That's correct. So there will be certain shift into the revenue mix, wherein the copper tube will take little more revenue mix coming in, and the enamel wire should be so this should be coming in between 60% to 40% eventually.
Right. Also, talk to us about, Hemant, your capex plans and also your capacity expansion. Right now, you currently operating in 3 plants, and you have approximately an installed capacity of 7,200 MTPA, and that you're likely to scale, right? So, what would be your capacity expansion guidance and also your capex plans?
This time, as we said, the Bhiwadi plant, which was the biggest capex for the Ratna Wires Limited, has already come into commencement. The production has started. Production is into absolutely great shape. Most of the companies, OEMs, air condition people have approved our product and the plant into the business. We will see a good growth, and we will see that that plant is utilization goes up drastically in the next financial year. And we have further more capex planned for the next financial year as well, which will be more into specialized products as well.
Finally, talk to us about the global headwinds that you might face. Now, your export is approximately 8% of your revenue mix, but given the tariff war that's going on, I mean, it is now settled though, but the fine print is yet to come out. What are the global headwinds that perhaps your company might be facing?
I think in terms of sales, it will be majorly domestic for us. The export will be more or less 8 to 10%. That's where our restriction is going to be. It's majorly the volume and the revenue mix is majorly going to come from domestic market for us.
All right, Hemant, on that note, thank you so much for taking the time out and joining us on the